Ms. Murphy?
You want me to go first?
Yes.
Can you hear me?
You may.
Do I need to scoot this back? Hi, I'm Shannon Murphy. I'm the Director of the Property Tax Assistance Division with the Texas Comptrollers Office. And I was asked to present some information today on various values. If you look at page 2, I've kind of lined them out for you. I'm going to talk about market versus appraised values on a statewide basis. We're going to talk about statewide appraised values by category, market versus appraised values specifically for residence homesteads. We're going to talk a little bit about residence homestead exemptions, the 100% disabled veterans exemptions, the circuit breaker limitation, taxing jurisdictions, and appraisal district board of directors. If you'll turn with me to slide 3, if this is the market versus appraised values statewide from 2013 to 2023, you can see that it's a pretty steady rise, this kind of curve rising up to the right, and you're going to continue to see that, I think, through the next slides when we look at breaking these down by category. On page 4, we have category A, your single family homes. These could be residence homesteads that have a homestead exemption or do not have a homestead exemption, either one. You'll see the total of the appraised value on the left, and it's represented by the orange trend line. And then on the right side, you have the average of the appraised values, and those are represented by the blue bars. You can see they trend in the same direction. On slide 5, this is multifamily residential. This could be apartments, it could be duplexes that are non-owner occupied and those types of properties, fourplexes. Again, on the left side, we have the axis, and then you have the orange trend line showing you those numbers. And then on the right-hand side, we have the average, and then we have the blue bars representing the average numbers for each year. On slide 6, this is category C. These are vacant lots and tracts. Vacant land is land that is not eligible for ag appraisal or for special appraisal. So these are typically more the kind of lots that people buy and build things on top of. And again, we have the total on the left-hand side with the orange trend line going up to the right. And then we also have on the right-hand side the average appraised values, and then the blue bars indicating also going up to the right. On slide 7, this is commercial real property. These are your hotels, motels, retail places, shopping centers, and so forth. The total, again, is on the left-hand side, the total value, and then with the orange trend line again, and then the average value on the right-hand side with the blue bars indicating where they fall out on each of those years. On slide 8, category F2 is industrial real property. That's, of course, the structures and the land, not the equipment or anything like that. That's in another personal property. Again, we have the total on the left with the orange trend line, and then on the right we have the average on that axis with the blue bars for each year. Now, oil and gas is a little bit different. It obviously is very volatile, and so you see a lot more up and down in oil and gas. You may notice that this chart starts with 2014 instead of 2013. That's when they started reporting this property of category to our office electronically, and so we are able to pull that data fairly easily at that point. And this has a blue trend line for the total and then red bars for the average. Slide 10 is category J, utilities. That's your utility companies. The total again on the left with the blue line, and then the average is on the right with the red bars. On slide 11, commercial personal property. This is things that are other than the land or the structure. And the total on the left with the orange trend line still going up on the right, and the average with the blue bars also going up on the right. And then category L2, industrial personal property. And again, the total on the left with the orange trend line, and then the average on the right with the blue bars. And those are the main categories that we were asked to kind of give y'all a value trend line on, so you could see how they've grown over the last 10 years. And I think you can see pretty consistently it's grown and increased over the last years, and especially in the last 2 years in 2022 and 2023. So if you'll turn with me to slide 13, we have the market versus appraised value specific for residence homesteads. And you'll see how it's fairly even for the appraised value and the market value all the way up until you hit 2022 and 2023. And that's because we had such high growth here in Texas, but then we have the cap that's held those appraised values down for people. And then on slide 14, this is the statewide average for residence homesteads, and the same thing. You'll see it on the right-hand side where there's becoming a bigger delta between the appraised value and the market value, and that is due to the sharp increase in market values and the appraisal limitation or cap holding those values down. On slide 15, we have the number of residence homesteads. And we broke them out for you over a 5-year period for properties that are less than $40,000, properties at $40,001 to $100,000, and then properties that are greater than $100,000. In 2021, when we passed the $40,000 homestead exemption, we would have had 363 and 167 homes that did not have to pay school district taxes. This is only applicable to school districts. In 2022, you would have had the 231,589 that would have been below the threshold to have to pay school taxes. In 2023, we've gone to a $100,000 exemption, and so that is, of course, those first two numbers added together, which is 897,452 that are going that are underneath that minimum to be taxed because they're fully exempt for school taxes only. On slide 16, this is just a visual representation of this, where you can see the number of those that are the homes that are greater than 100,000 has continued to increase, whereas those that are 100,000 and lower has continued to decrease. And that's just a shifting of the market in Texas to higher property values. On slide 17, we have 4 major disabled veterans exemptions in the state of Texas. The one I'm going to focus on here in the next slides are the 100% disabled veterans exemption, but we do have these 4. Some of them allow for surviving spouses. One of them has surviving spouses and children. Most of them are on homesteads, but one can be on any property. I'm not going to read all this out to y'all, but if you'll turn to the next slide on 18, you can see the number over the last 5 years for the blue line in the middle has continued to increase, and that is for the 100% disabled veterans. The other disabled veterans exemptions have remained fairly steady. And I have this underlying data in another slide if you're curious what these actual numbers are. On slide 19, you can really see it here again, where you can see that the 100% disabled veterans exemption is the one that is really the biggest exemption of them all, and it continues to grow every year. And we've been looking at this for a while and have kind of come to the belief that the 2022 PACT Act that the federal government passed they expanded the definition for disabled veteran and what you can have to be a 100% disabled veteran. So there's more people that are eligible for that exemption than there used to be. And then also, of course, that creates more communities that are eligible for the local relief fund that we'll talk about here in just a second. On page 20 is the underlying information for each of those 4 exemptions with the number of exemptions and then the value that each of those exemptions is worth. On slide 21, as I mentioned, our office administers a local government relief program. This is relief for certain cities and counties that are eligible and qualify for payment for reimbursement for monies that they are no longer collecting due to the 100% disabled veteran. They may be in an area where they're highly impacted because they have a lot of people with that exemption in their community. If you look at the next page on 2022, you can see the amounts that are being requested by these entities in blue and the amounts that we have been appropriated for this program in red. This program began in 2016. We put the number of qualifying entities at the bottom, and you can see that the number of entities is growing. I believe that's, for one reason, is that as more entities find out about the program and realize they're eligible, they're starting to get more applications in. And then secondly, I also think as the number of veterans, just 100% disabled veterans increases, that then you also have more communities maybe that meet certain thresholds for percentage of revenue and things that allow them to be eligible for this program. On page 23, this is the circuit breaker limitation that y'all passed. It was effective in 2020 for the 2024 tax year. We're still collecting 2024 data, and we hope that we'll be able to have that data ready for y'all in February of 2025. We were asked about the number of taxing jurisdictions, and so this chart on page 24 shows you the different taxing jurisdictions, counties in red, school districts in green, cities in purple, and special purpose districts in blue. You'll see that most of them remain the same. The only one that has any significant change is the special purpose districts, and that group tends to grow. On slide 25, this is just a graph of the property tax levies by type of jurisdiction. And again, you've got school districts in blue, cities in orange, counties in gray, and special districts in yellow. And if you'll notice that there is a big dip down from 2022 to 2023 for school districts, that's attributed to the $100,000 homestead exemption that they're getting now. On the next slide is appraisal district board member elections. Now, counties with 75,000 population or more have 9 board members, 3 of which are elected. And so that equates to 50 counties in the state that fall into that program, and those are highlighted here on this map. If you flip to the next page, there are 6 in red, and that shows you the ones that had runoff elections in this last election. A couple of these actually had multiple runoff elections within their county. But if you look at slide 28, you'll see that there were many of the elections that were canceled because they either had just enough people for each race, so they didn't need to hold the race, or they didn't have enough people that were running to begin with. We had 5 counties that had no candidates at all that were eligible to do this. So it kind of gives you the information that we collected on that too. That's not information our office collects. That's information we just went out and collected as we thought we'd be asked. And that concludes what I've got. Do you have questions?
Are there any questions? Representative Shine.
Yes, sir.
Yes, ma'am. So, you got me? Okay. This disabled veteran exemption is costing local communities quite a bit of money.
Yes.
Counties and cities, because school districts are held harmless. Is that correct?
Correct.
Okay. And I understand the statewide average on the impact on tax levy is about less than 1%, but you've got about 12 communities, because there are 15, as I understand, there's 15 military installations in the state of Texas. And those installations account for about 115 to 120 billion in economic impact to the state, which is number 3 behind manufacturing at 241, oil and gas at 206. So the number 3 economic engine. in the state, yet we are having counties and cities bear the brunt of this that are military communities. So I guess my question is, at what point do we identify this as a real priority for the state to address and take care of the problem? I mean, is that on the radar screen?
Yeah, it's definitely on the radar screen. I know our office, I believe, is asking for additional funding, but ultimately it's up to what the legislature funds for the program. It has a specific appropriation.
So last session, we had a bill that Comptroller Hager helped us with, providing for a account outside of the regular appropriations process. Now, I understand the Comptroller's office has a number of accounts like that. Is that correct?
I don't have the answer to that. Maybe Brad? Yes.
Okay. So the estimates that I saw last session were about 200 to 200 million per year, roughly 400, and we're actually there's looks like $36 billion in property value that's not being taxed, which for local communities is a little over $360 to $400 million every biennium that's there. Would you help me and explain how that, if you have somebody here, of how that mechanism would work with that dedicated account that would be funded to be able to take care of that? Is there someone here that can address that?
I'm Brad Reynolds from the Comptroller's office. The legislation Representative Shine is referring to was
House Bill 1613.
the committee substitute for House Bill 1613 would have established a dedication of just a dollar amount out of sales tax, $200 million per year, out of sales tax, directing the controller to transfer that amount into a trust fund outside the state treasury. With that kind of fund status, expenditures from that fund do not depend on the biennial appropriations process. His desire was to set up a funding mechanism that just perpetually, year after year, we would transfer money into that fund and then compensate the disproportionately affected city and county governments. Those are disproportionately affected by this 100% disabled veteran exemption. And we had a provision in that substitute that would prevent, if, for example, that it stopped growing, as like at the time we worked on the bill last session, we didn't anticipate a slowdown in the growth in that, but here we see the value increase only went up from 34 something billion to 36 something billion from 22 to 23. But we had a provision put in there so that if there were any excess funds in any year left in that trust fund, it would come back to GR, that you would not inadvertently build up an unused fund of money.
For the purpose of reimbursing those local communities,
to pay the.
So, do you know how many trust funds like this we have in the state?
I don't have that memorized. We have, well, technically we have one for every qualified hotel project.
Right, because that's where it comes, kind of structured under that trust aspect of it. Yeah.
And there are active, we probably have about a dozen or more than that active of those type. Plus, you just authorized last session and for more, in addition to 2 cities that already had authority, you authorized 4 more. So you've got authority now for 6 what are called project finance zone. And each one of them will have a trust fund that's outside the state treasury. And through that program, you've got state hotel tax, state mixed beverage tax, and state hotel tax being transferred out of the state treasury into the trust funds for them. So it's north of 20. And I think technically also the special events trust funds, you've got 2 of those. Those are structured the same way.
And that's administered by the Comptrollers Department, right?
The special events trust funds are now administered by the Office of Economic Development and Tourism in the governor's office. I mean, we do the financial accounting, of course, and make that transfer, but it is the governor's office that's determining how much money will be paid out to the eligible entities for those special events.
I know that we have one municipality, or actually 2 municipalities in Central Texas with Fort Hood, Fort Cavazos, that they lose 25% of their property tax revenues due to this legislation. We have 3 counties in Central Texas around Fort Cavazos. Coryell County loses 10, Bell County loses 10, Lampasas, I think, is represented here today, and they're around 10 or 12%. That number may be higher from that standpoint. My point of the question is this is a critically important issue for communities that are surrounding 15 military bases in the state of Texas that is the 3rd largest economic sector annual output for the state behind manufacturing, oil and gas. And I just want to stress the importance to this committee of how much we need to address this issue for our counties and cities, because schools are held harmless, but the counties and cities were completely left aside, with the exception of a small bit of money that's allocated, but it only pertains to those municipalities that actually abut those military installations, and it's only a small percentage of what's there. I just wanted to make sure that we got that on the record, because this is a critical factor for 15 communities across the state of Texas, and they lose $36 to $40 billion of value and nearly $400 million in tax revenues, which impacts police, fire, emergency services, and the other side of it, from an economic development standpoint, at $120 to $125 billion in economic aid. If there's ever a base realignment, I can assure you the Department of Defense will be looking at those communities that are unable to provide those essential services, and that means those military installations could go somewhere else, and we would lose that number 3 economic input for the state of Texas. I just wanted to make sure that was in the record. Thank you, sir.
Any other questions, members? Not Representative, Ms. Johnson.
Thank you. Ms. Murphy, with regard to the slide on page 3, I heard it discussed earlier, and so I'm somewhat confused by the terminology, but market versus appraised is. My office frequently receives calls and the appraisal notices go out. People want to know, what should I look at? Because in my county, it's not market and appraised, it's market and assessed, and what's the difference, and what should I be protesting? We always tell them to protest the market value, period. And I think that there needs to be some clarification in the law. I'm actually working with Senator Middleton's office on that, on having market and taxable, or market and capped and taxable, because the appraised value is in essence what I'd heard earlier, the capped value, which some appraisal districts call the assessed value. So it's so very confusing to property owners. But so your market versus appraised is that capped value is what you're, okay. So somehow we need to straighten that out. And when I see anybody using the word assessed value, I cringe, because it's not even defined in the tax code. Matter of fact, it doesn't exist in the tax code. The only time assessed comes up is when we're doing the calculations of taxes. So it's something that definitely I hope to work on. Going to the slide on page 23, on the circuit breaker limitation, there's some information that we had received in our drop boxes on the effect of the circuit breaker. and I think I heard you say that the data is going to be ready in 2025. Is there any way that you could get the most current data rather than certified? Because this information that was given to us by TAAD was certified, and in my county alone, that certified loss dropped 12% from certified to sub 2, which was just, I mean, it's a 50-day difference. So the impact of that circuit breaker went down so much. I fear if you're going to be using certified, it's going to be a false number. It's not going to be an accurate number.
We start with certified, and then we do data validation for it, and then we put it out in the preliminary findings when we certify that information to TEA.
So
that's when our data is ready, after we've had an opportunity to validate it and then correct anything that looks anomalies or whatever that may have been reported.
Ms. Murphy,
inaccurately.
can you move your microphone over just a little bit so we can hear you, please?
I apologize. I said what I was saying is that our data isn't ready until February. We start getting the appraisal rolls in August. We still don't have all the data in from every appraisal district yet. And so once we get the data in, then we have a validation process that we go through for that data, and we will send pre-preliminary data back out to appraisal districts to take a look at in December to return to us again, and that's how we determine the local values that we use in the study. And so we won't have it validated until that point to be able to release it from our office.
So, but for the purposes of, I'm sure it's going to be, I mean, it's being examined today, what's the impact of the circuit breaker? Because from my perspective, is I want it not only continue, I want it to be lowered. I'd like to see that. So, but if we're seeing a number that is inflated from certified versus what the actual number is, I don't want the legislature to not have an accurate number on which to base their decision. So when I looked at this, and the first thing, I always do when I see a county, I look up Galveston, and immediately I saw it was $49 million wrong. And so I immediately got in touch with my chief appraiser and said, what in the world did you give them? And she said certified. And I said, but 50 days later, it's down $49 million. She said, well, they didn't ask for the current. So if there's any way, and I would do whatever I could to assist with getting that most current information, because I'll be up here testifying to Ways and Means and saying these numbers are wrong. And so don't rely on this, get the most recent data. And I'm sure TAAD can get that information. I know that what you go through is I'm getting ready to enter all that information for you from Truth and Taxation. There's no new revenue rates and all that information. Maybe in these databases that are being created, that some of that information could be captured for you, because I know it's a lot of numbers. And then the final thing is, please add Galveston County to your 3 canceled elections. Officially, I can tell you.
Too?
Yes, we were thrilled that we only had 3 members and there were no elections, and that saved us about $400,000, so we were happy with that. And thank you very much.
Thank you.
Thank you. Members, any other questions? Thank you for your testimony. Chair calls Maggie.